What's up, traders? My name is Layla, and welcome back to this week's no-nonsense market recap from Bullish Bear. U.S. markets pushed through a volatile, headline-driven week. Investors balanced solid economic data against rising geopolitical tensions and shifting Fed expectations. After reopening from the President's Day holiday, Tuesday's session was relatively quiet as traders digested global developments and fresh corporate updates. By Wednesday, sentiment improved. Durable goods orders, industrial production, and housing starts all topped expectations, reinforcing the idea that economic momentum remains intact. Meanwhile, minutes from the Federal Reserve's January meeting revealed a divided committee. Some officials favor steady rates, others are open to cuts if inflation cools further, and a few even suggested rate hikes if price pressures reaccelerate. Energy and geopolitics quickly took center stage this week. Oil prices surged after Donald Trump said he would decide within 10 days whether to authorize military strikes against Iran. This heightened concerns about potential disruption in the Strait of Hormuz. With diplomatic talks stalling and military activity increasing in the region, WTI crude climbed above $66 per barrel to a fresh 2026 intraday high. Earlier in the week, Iran's temporary closure of parts of the strait for military drills added to supply jitters, though no major disruptions materialized. The US dollar strengthened, gold eased lower, and bond yields hovered near recent highs, signaling a market carefully weighing inflation risk and geopolitical uncertainty. Earnings continued to drive sector rotation. Walmart beat quarterly expectations but issued softer full-year guidance, denting consumer sentiment and contributing to late-week weakness. All the while, Amazon surpassed Walmart in annual revenue for the first time ever. This heightened the structural shift toward cloud computing, advertising, and AI-driven business models. DoorDash rallied despite missing earnings estimates as investors focused on unit economics and progress in its investment cycle. Broadly speaking, earnings have continued to outpace expectations, particularly in consumer spending and cloud computing. Though select chip makers saw volatility amid broader tech consolidation, technology leadership remained nuanced. Apple gained more than 3% midweek, decoupling from the Nasdaq as investors rotated toward relative stability. Nvidia advanced on AI partnership headlines but experienced intermittent pullbacks as traders shifted within the space. Meta Platforms drew attention as CEO Mark Zuckerberg testified on engagement strategy. All the while, crypto markets stabilized near key technical levels with Bitcoin hovering just below $69,000. Regulatory scrutiny around AI tools and defense applications added another layer of uncertainty, even as companies like Amazon defended aggressive AI capital spending plans into 2026. Beneath the surface, economic data pointed to ongoing labor market resilience. Initial jobless claims fell to 206,000 and weekly averages tracked below last year's pace. The U.S. trade deficit also narrowed modestly, and consumer-facing companies reported steady demand, especially among higher-income households. Looking ahead, investors will be watching December PCE inflation data, personal income and spending figures, and the advanced fourth quarter GDP estimate. They will also be keeping an eye on updated University of Michigan consumer sentiment readings for clarity on inflation trends and consumer strength. Major earnings from Nvidia, Home Depot, Alibaba Group, Salesforce, and Dell Technologies could set the tone for sector volatility in the week ahead. For now, markets remain resilient, but the balance between growth, inflation, and geopolitics will play a critical role in near-term market performance. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.